Oklahoma says it cannot afford stronger schools, better teacher pay, health care, child care, or workforce development. But it spends or gives up around $1.3 billion a year through tax credits, cash payments, reimbursements, and subsidies. If taxpayers are paying the bill, taxpayers deserve the receipts. When assistance goes to poor families, politicians call it welfare. When public money flows to businesses or well-off families, they call it economic development or choice. The name changes. The cost to taxpayers does not. We arrived at the roughly $1.3 billion figure by reviewing tax credit data, OTC spreadsheet records, IEC reports, and state agency information. The state does not publish one clean total. The money is scattered across agencies, reports, incentive programs, and reimbursement systems. Prove it does not mean every incentive is bad. It means every major public dollar program should answer basic questions. Did it create jobs that would not have happened anyway? Were the wages high enough to raise Oklahoma family incomes? Did taxpayers get more back than they put in? Oklahoma has spent years selling tax credits and cash incentives as economic development. But a ribbon cutting is not proof. A jobs announcement is not the same thing as a higher household income. The real test is whether Oklahoma families are catching up. If Oklahoma's economic development strategy worked, household incomes should be growing faster, poverty should be falling, and more families should be moving up. But Oklahoma is not catching up. That is the real report card. Oklahoma already created the Incentive Evaluation Commission to review some economic development incentives. The IEC hires outside experts, studies the programs, and recommends whether they should be retained, reconfigured, or repealed. In plain English, keep it, fix it, or end it. The problem is that the IEC can only recommend, cannot force the legislature or governor to act. It can identify weak standards, poor targeting, missing data, or programs that need reform. But elected officials decide whether to fix them or put the report on a shelf. From fiscal year 2015 through fiscal year 2025, Oklahoma Open Books tax credit data show roughly $7.33 billion in investment/new jobs credits alone. That is not a minor line item. That is a decade-long economic development bet. The same standard should apply to Oklahoma's private school tax credit. Public schools are judged by test scores, attendance, graduation rates, and public accountability systems. But private schools receiving tax credit-supported tuition dollars do not face the same public reporting standard. Private school tax credit assistance is sold as a statewide solution. But the dollars are heavily concentrated in Tulsa and Oklahoma County areas. Since taxpayers across Oklahoma fund the program, lawmakers should have to show whether it expands opportunity across Oklahoma or mostly subsidizes tuition already being paid. This is the standard Oklahoma should apply. If a program works, prove it. If it almost works, reform it. If it cannot prove a public return, end it. Oklahoma does not need another economic development slogan. It needs receipts. Prove it, reform it, or end it.